There's a great deal of optimism. It was sudden. It was everywhere. It was all over Davos. Everybody was talking about it. And that's the big picture here. You know, there are a lot of people outside of China who want to be able to do deals in China, and that opportunity appears to be, you know, returning. But China's becoming a sort of interesting variable in the U.S. rates picture, interest rate picture, because there's concern that as China, you know, rebounds, that could have an impact on inflation.
Could be too much of a good thing.
Yeah,
right?
It could be too much of a good thing, particularly around commodities. If you look at January, this is as of last week, January, aluminum and copper were both up more than 12% on month. And then LNG, of course. You know, if China comes back into business, they got to keep those factories open. They're going to need that energy, they're going to need that power, and that's going to have a ripple effect elsewhere. And so then what does that mean for rates? The Fed has been working for a long time to get that, you know, they've got that 2% target. They've been working hard and have made progress, apparently. But there's concern that this sort of could muddy those waters.
Yeah. And especially on food as well, and food and energy have been non-core, of course, but they are the commodities that really matter for Main Street. But it's not going to gap higher, arguably, is it, inflation in China and spill over, because the Chinese consumer is in pretty bad shape post-pandemic. And is he or she really in a mood to spend? Yes, there's 1.4 billion population, and there's going to be a certain element of revenge spending, but I cannot see it really gapping higher.
Yeah, it's a good point. There are a lot of variables. If you look just at consumers, as you just pointed out, for example, we're just coming off Chinese New Year. Mm-hmm. That means that a lot of folks traveled out to the countryside, out of the cities. We don't know what that's going to mean for the COVID situation. You know, there are some people who think that, you know, that the tourists are just going to, like you said, sort of like rage spend, rage travel, head out of the country. If that happens, there's going to be, you know, a spending increase there. But it's not. We just can't know because there's just too many variables right now, you know. And there are a lot of people who think there are structural problems with the Chinese economy. You know, I mean, it goes that far. It goes all the way from some people who think that there are structural economies that haven't been addressed yet around real estate and that sort of thing. All the way to people who think, you know, we're going to go straight back to 2019. You know.
Yeah. Then, of course, there's the demographics, right, which we talked about last time.
Yes.
Yeah. So that's not going to help the economy.
I think that you touched upon a really important element about the structural deficiencies in the Chinese economy, and especially, not least of all, in the labour market, in the jobs market, especially amongst the younger generation, youth unemployment, etc. So that's probably a factor that's going to keep inflation repressed. Yeah,
off-record highs, but still pretty near, about 17% last I checked for youth unemployment, right? So it kind of begs the question, you know, Ted, for years now, people have been sort of watching and waiting for the point in time where China actually overtakes the U.S. as the world's number one economy. Well, what's going on now, not least the structural stuff, including demographics, hey, that date may be pushed a little further out, sounds like.
Yeah, there are people who think that. I think that's the baseline argument at this point, is that date has been pushed out by a number of years. And there are some people who, some economists, prominent economists, who think that it may not happen. This news that we got last week, and it only just sort of came out last week, but it's news from 2022. Of course, you have the demographic situation where the population is actually beginning to shrink. One way to look at GDP is that it's sort of, you know, it's sort of population, you know, the number of people that you have multiplied by, you know, productivity. Well, if you're in a decline, look at Japan, or look at Italy, or look at Germany. You're going to have, you know, that's a big barrier to overcome. So, you know, there's really no telling there.
Indeed. CNBC.com, just a mouse click away, and that is exactly what I did. And what caught my eye was how to use intuitive eating to develop a guilt-free relationship with food, posted 23 minutes ago. That's probably not a reflection of what is trending. An interesting story nonetheless.
Yeah.
But what is trending, Ted?
So what is trending? Google is trending. You guys might have seen that the Department of Justice has launched, actually it's the second antitrust case. The first one was launched by the Trump administration. Now we have a new one from the Biden administration. It looks like the DOJ seeks to break up their ad business. The argument being there, of course, that Google is sort of operates on every sort of facet of that industry, that ad business, that ad market. And so there's some concern there if you're a shareholder in Google, of course. Also, I didn't have this in the list that I sent over earlier about what's going on, but there's Microsoft earnings just popped. They beat their numbers. And that's a lot of things looking bullish for Microsoft lately. Also, there was an interesting breakdown at the New York Stock Exchange yesterday. 200 shares, 200 stocks were halted, and the NYSE even said that they were going to have to cancel some of those trades. And then yesterday's market action overall out of the United States, obviously getting a lot of attention as the U.S. tries to sort of like keep the momentum going here early in the year.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.